Good afternoon, everyone. I think as Kavya called it, the graveyard session, we've consciously made a decision to stand and have a more informal conversation, so at least we don't go off to sleep. Not sure about the rest in the audience, but we just want to make sure, given the post-lunch session is always hard on everyone, we'll try and make it as crisp and as interactive as possible. It's a very, very interesting topic, a topic which is very pertinent in the current times. Obviously, about 10 months ago, RBI gave 10 small bank licensees, Shantanu's firm, Janalakshmi being one of them. And different firms have paced themselves. There's one which is already up and running, the Capital Local Area Bank in Jalandhar. The rest, Equitas just got their final license. They haven't commenced yet. But it's a topic which is close to a lot of people's heart. And I thought it'd be interesting to ask Santanu his views on how he feels the industry is dealing with some of these. So Santanu, just to kick it off, I think the first thing which I'm sure a lot of people have questions on, this is an experiment in some ways, whether it's the small banks or the payment banks. If you look at the banking ecosystem today, there's the traditional public sector banks, there's private sector banks, the NBFCs obviously, and you guys are transitioning from being NBFCs to a small bank. How will this change the ecosystem? What do you see? Who's going to gain? Who's going to lose? How will it sort of overall change the ecosystem of banking that exists today?
Right. No, thanks. Before I answer the question, what's going to change or who's going to affect, but I think it's best that I put some numbers in context.
Sure.
Firstly, the way we look at it is that the small finance bank at the core will continue to remain an inclusion player. That is very important to understand. It's not that all of a sudden that small finance bank, their entire sort of contour is going to change. What's going to happen is essentially, in addition to the core business which we currently do, obviously one of the biggest advantages as we move into the new world is an access to liabilities. Right. Which is essentially provides us an option to secure affordable, low-cost liabilities on which we could fund the other side of the balance sheet. It's not going to happen overnight.
Yeah.
There are a lot of major players. I think we need to be realistic about it. So overnight, your CASA balance is not going to be shoot high. But obviously, there's to be fixed components which will gradually. But I think so why is it core? It's most important to understand that, according to the census 2011, and I think the numbers have changed directly, we anticipate there are about close to 65 million, 6.5 crores enterprises in this country. And when you talk about enterprises, it is just not the blue chip, publicly quoted, but it also included enterprises who are literally at the street economy.
Yeah.
So there are about 65 million of them. The total asset, the lending book, is from the entire banking system is India, roughly about 60 lakh crores, which is consumed primarily between 10 to 15,000 enterprise. We anticipate, so you've got 65,000 enterprise, you've got 60 lakh crores of lending book consumed by 10 to 15,000 enterprise. Roughly about 50 million of 5 crores enterprises in this country do not have access to financial institutions. Right. You do not have a formal banking institution. So I think that in terms of the opportunity, I think it is enormous. So while there would be competition, there could be competition on the liability side, but even if you look at, even on the liability side, yes, understandably most of the players has been on the mass affluent side or the ultra net worth, yeah. But the opportunity in terms of micro savings does not exist in this country today. There's no player, very few people have a product offering which caters to that. Because what's most important is if you look at some of these players, they are not just about saving. They're about, you have to match the offering in terms of the cycle of their earnings, whether it's daily, weekly, or this thing. So in a nutshell, I think this is a huge market, and I think it's only going to expand with the coming in of the new players.
Got it. Thanks. Very helpful. I think moving on, in terms of the licensing conditions, unlike a universal bank, there are certain restrictions which are imposed on all of the SFBs, whether it's the ticket size, or PSL. as you evolve these business models, in your mind, what will the SFBs have to do differently in terms of their operating architecture, in terms of their business model? I mean, I can see that I'm dressed more like a banker than you are, so clearly there's something that you're going to go differently in terms of the culture. But just in terms of the business model, what would the SFBs have to do differently to succeed?
Yeah, so just touching on the first point which you said in terms of whether it constrains us, the whole SFB versus universal bank. Answer is literally no. In fact, because there are about 3 things which we can't do or we are limited to do. One is there's a certain percentage of the book has to be a priority sector, which we already are. We 100% that. The second thing is there's certain caps in terms of up to 50% of your book cannot exceed, I think it's 25 lakhs.
Yeah.
We are way beyond that because for us it's group loan, we are going up. So I think that's something which is there. And finally, I think it's about your category of your foreign exchange license. So in terms of constraints, there are none. But obviously, when you become a bank, although as an NBFC MFI, we are regulated by the Reserve Bank of India, but when you become a bank, I think the onus of compliance is far significantly higher. Whether in terms of what systems you want to put, what sort of risk management you want to put in, what sort of compliance framework you want to put in, everything is highly regulated. And obviously, I think when a bank is being built, your system, technology, architecture, the risk policies, the products and offering which you are giving, all has to be aligned to that. So if I would have to say as a banker, when we move as an avatar to a banker, what do we focus upon? Obviously, technology is going to be the key because that's going to be a differentiator. Secondly, obviously, the people. Because while you continue with the people, some of the people will upgrade themselves or they will have to be reskilled.
Right.
But there would be a large population who would have to come in because they don't have the skills. People don't have the skills, so that has to change. The entire risk framework, the policies, the compliances, the robustness of your operations, that will also have to change. Obviously, as we heard in the previous session, partnerships is going to be extremely important because you are entering into an ecosystem of technology, so partnership is going to be crucial. So variety of things. I think we're going to be much more regulated than what we are today.
Got it. You've obviously served a very different customer segment compared to the traditional banks. You've complemented, the focus that they've had. As you move forward into becoming a small finance bank, how do you sort of ensure that you continue to remain focused on that customer segment which has been financially deprived in the past, and now offer a bouquet of services besides just a small ticket loan which you were offering earlier?
Right. No, as I started by saying, I believe that a small finance bank at the core will continue to drive inclusion. So interestingly, the way we look at ourselves we say that we serve the Bharat today. Bharat is the India version of Hindi.
Right.
India. And tomorrow we're going to serve India. So obviously they're two different, and we say that we are possibly the bridge between the Bharat and India. From the existing customer segment, I don't think anyone can afford to ignore that because that is a core. That is a core of a bane of our existence, why we are what we are, the essentially exclusion player. And if not anything, the new world, which is the liability world, will only sort of enable for us to grow this business. So it's more like today for tomorrow, if we need the funds, where do we go to? We go to a bank, we borrow them. We go to the investors, we borrow them. And tomorrow we will access liabilities from the market, from deposits, which is again going to fund our balance sheet. So in the sense that the opportunity or the canvas, if at all, is going to significantly widen rather than one canvas shrinking and other growing.
And then, just to, make it real for everyone here, any example that you can share which sort of gives a sense of how it would be different from, a traditional sort of bank, whether it's in terms of branch design, whether it's in terms of customer delivery, anything that you can share which brings that to life a little bit, relative to how branches and banks operate today?
Yeah. So one of the important things is that we use technology as an enabler. Even before, speaking for Janalakshmi, even before the SFB came into existence, before we were awarded in principal license,
Yeah.
we use technology extensively to to deliver a service proposition. Let me give you an example. Like for example, if you go back many years when ATMs were introduced or the technology was introduced in the banks, we remember that the first ATM came in the bank, and then there was a concerted effort which was made to say that please send the customers from the
Branches.
tellers to the ATM, because it's very difficult for us to serve those customers.
Yeah.
So as technology moved up, and even today, you and I, if we've got mobile banking, we have got internet banking, very rarely you will find out we don't need to sort of go to a bank to do our transactional services, maybe once a year or 2 years, who knows when. But if you look at the customers, the customers whom we serve, the underserved, the microfinance companies, we use a combination of high touch and high technology. Because while technology helps us to become scale, and this business is about scale. If you have to succeed in this business, especially in this segment, you cannot be a marginal player. Even otherwise, the way we look at it is that on this side of the balance sheet, it is not so much about your credit risk.
Sure.
It is about your operational risk. If you can manage your operations better, I think that's where you succeed. So what we say is that we are in some ways the private bankers to the poor. In other words, we use what we call something called, which we say, physical, which is basically a physical touch with a digital delivery. But again, when you go to the other side of the balance sheet, which is basically when you go into the mass affluent, when you go to the affluent, the high net worth, their requirements are completely different. So obviously, we need to, and if you have to, since we are coming in, we would be amongst the 21 banks which is coming in already into some of the larger private sector banks, public sector banks, and everyone is putting heavily investing on technology. So we would have to obviously compete in that market. And we obviously have to put in the digital channels, the digital technologies, in which, and more importantly, have offerings or solutions or products which basically cater to that need. So I think it's a two world which we'll continue to live in, and then somewhere on the line there would be the bridge from where people from one world will cross over to the other.
Got it. Thanks. I think given, as MFI, historically you focused on the lending side of the equation largely, and now as a bank you have to focus on both sides, the liability side equally, like you mentioned earlier. That's one of the challenges, that you'll have to sort of surmount as you go forward. What are some of the sort of top challenges that you feel are extremely important to address upfront in order to succeed?
Well, I think I touched briefly about in this thing, but let me sort of say, obviously, we need to continue to operate at scale. I think technology is going to be very important, and obviously from a banking perspective, not only we'll have to invest in the standard, hygiene stack, but also invest in multi-channel customer access points, whether it's ATMs, whether it's mobile, whether it's cards, whether it is other form factors. So that is going to be there. We need to also, at some point of time, ensure that we are abreast with whatever is happening. We heard in the previous session things like the robo-advisories, whether it's the blockchains of the world. So obviously we have to continuously sort of there. Partnerships, as we all heard in the previous thing, is that's going to be very critical to this thing. You cannot sort of manufacture everything. It becomes, because at the end of the day, I think one has to ensure that you are able to sort of serve the customers at the lowest economic value. So in some ways, to partner some of these ecosystem players is going to be very, very interesting. It's rather than building. Obviously, the whole risk framework, putting in the systems and processes. If you're in the payment space, if you're in the mobility or card space, your risk is going to be extremely important. How do you really sort of start doing that? Data is going to be very important. We need to invest in data warehouse, advanced analytics and modeling, because at some point of time, the data and the lending piece is again going to have a strong interplay as we have started seeing. People are going to be very important because we need a new genre of people who's going to come in, who understands this business, both at the senior management level, because not everyone whom we have today is able to cross the divide. And operations, obviously. How do you manage your operations? How do you have real-time in this thing? So I think it's going to be an interesting journey going forward.
One of the biggest motivations to become a small bank, obviously, is to eventually tap into a deposit base, lower sort of cost of deposits, whether it's CASA or term deposits. And that's something which, has been a challenge for all the, licensees, including Bandhan and IDFC. Bandhan's obviously shown the way in terms of how they've been able to ramp up their deposit franchise. But given you lend to, arguably, a segment where the deposit potential may not be all that much, you'll have to really mine a very different segment. So how have you, thought through the liability side of the equation, just picking one challenge to go a little bit deeper on?
Yeah, so obviously, you're absolutely right. I think, as an inclusion player, we would have to, one of the areas where we'll have to focus is on the whole micro savings. But you're absolutely right. The unit of these savings is going to be low. And these are very high cost because you have to, reach out to the customer. But that is part of the social fabric, which part of this thing which we are. So we will do that. But again, when you go out to the other world, which is the more mass affluent, I think technology would play a very important role. Understanding how do you sort of create offering product. We call it more as offerings rather than products. Products are a very singular term, so you might have a credit card, a debit card, which may have certain miles or rewards, or you go to the airport and you can get into one of the priority lounges, but that's very, commoditized.
Sure.
So, but in our view, I think it's more about how do you create offers. You understand a customer segment and then sort of say that, okay, for this particular customer segment, you require these things. We need to be cognizant of the fact, and I think we need to be realistic that, when you look at this particular segment of the customers, many of these, people like yourself or anyone on this room, you would already be a customer of an existing institution. So you are not going to come and become a customer of small finance bank directly. I think we are acquiring that. But I think where the real play will be is that how do you sort of, because there's a social value attached to it, and a lot of people have a social value in terms of what the institutions are doing. And if you can say that, if you put money into this organization, and I'm just saying a hypothesis, there's a value which you are creating out of that. At the same time, you're not only sort of putting the money in a safe and secure way, but you're also having a chance to maybe earn maybe 25, 30, 40 basis points more. This coupled up with some of the powerful offerings which are highly technology-led to ensure that what you are getting from a small finance bank is at par or even better than what you possibly get in other bank could be a very compelling proposition. So it's going to take time. I think in my view is that I think we believe that the proportion of fixed deposit will be far more initially than what will be in the CASA, but that's okay. We are today borrowing at a very high this thing. Even if we sort of get 100, 150 points leverage or benefits, that's still good enough, which we can pass on to the customers.
Got it. And just on that accord, any product innovations? I mean, there's obviously, to your point, let me call it offerings innovation, given product is a commoditized word in Janalakshmi's lingo. But in terms of offerings, anything which you've thought through which would be more pertinent to the customer base that you'd be serving, relative to what traditionally banks have, which is plain vanilla sort of loan products?
Well, there are a multitude that, and I don't want to sort of talk much about it for proprietary reason, but let's face it. Like for example, I'm just giving an example of not from the affluent segment, but even for, and let me sort of give you a example, a real life example, and I think this is a very powerful example of what we can do. So essentially, we invested in the payments platform much ahead of the curve in anticipation at some point of time we will get the license. which includes a mobile wallet, which includes prepaid cards. Incidentally, we are one of the largest prepaid card issuers in this part of the world. And all our loans are disbursed on prepaid cards. Last year alone, we disbursed close to 11,500 crores of loans onto prepaid cards. We have a base of about close to 5 million cards. See, what we said is, if every customer has got a card, can we sort of create an opportunity for savings? So we have created a product called Jana Bachat. Now that Jana Bachat is essentially a digital pygmy banking, if you use the old terminology, which essentially means you swipe up a customer and tell a customer saying that, what do you want to save for? Rather than telling a customer that you just save for, put in 100, 200, 500 rupees, we say you save for your dream. Someone says, I want to save for my son's education. Someone says, I want to sort of refurbish my house. And we ask them, how much do you want to spend on that? So that process, they're saying, I am possibly going to spend about 30,000 rupees in the next 1 year. I need 30,000. So 30,000 rupees by any sort of figure is a very substantially large amount for anyone, including us possibly. But we tell them that, okay, if you are going to save 100, say for example, you save 100 rupees per day. For 25 days a month, for 1 year, you get 30,000 rupees. And that's where the light bulbs goes up. So what we do is that we do not leave it at that, because we know that these people don't have time. Right. They have their this thing. So we actually sort of is completely digital. We use the MPOS. We have developed an MPOS solution where we actually sort of go and to the customer's home or the place of work and collect that amount digitally. So there's no paper. And then that amount is automatically transferred to what we call a locked account, and then at the completion of the goal, the customer has got access. So I think importantly, the purpose what we are saying is that we need to be creative enough to understand the true requirement of the segment and then sort of develop a solution.
No, very, very helpful. I know we're running short of time, and I do want to make sure that the audience gets the opportunity to ask you at least 1 or 2 questions. But just one final question from my side before I turn it over to the audience. And I can't sort of not ask this question as an investor. Obviously there'd be a lot of investment required as you become a small bank. There's the CRR, SLR drag, which will be applicable from day one. So from an investor's perspective, there's obviously going to be some drag initially relative to where you were before. When do you see that stabilizing? And the answer varies, obviously, depending on what strategy people are adopting. But what's your view in terms of how that will stabilize?
Well, I think the good thing about SFBs is that you've got already an existing very robust business, which is there. And obviously, absolutely right, there are a certain amount of drag which is going to be taken in terms of the investments which you are making in technology, people, and everything. But again, mind you, while this is going on, the other side of the business continues to grow, and it depends upon how big or large you can grow, depending on appetite for this thing, which is this thing which is there. Very difficult to say when I think you're talking about ROE, ROIs, but I think it shouldn't be very long before you come up the curve. It's a very, very profitable and it's a commercially viable model.
Got it. Thank you.